4 points down for the Nifty, not looking that good, not looking that bad. But the good thing is we have recovered from the day's low. 4 points down, 8,669, 0.04% decline. Not much in terms of mid-cap recovery, but however, large caps have recovered. In the last 10-15 minutes, we've seen some movement coming in on the upside. It again tells you that ETF flows are strong. The way markets have been going is because of the ETF flows. We got some data today coming in from CLSA, which suggests that about 40-50% of the flows that we have been getting has been coming in from the ETF side, and that's probably the reason why the large cap names have done well. 32 points down for the Sensex. Let's look at the broader market space. I don't think there has been much of a recovery that has come in. So it's not the broader. Okay, there has been a recovery. Mid-cap index was up 0.4%. It's now up 0.6. Let's welcome in our next guest on the show, Mayuresh Joshi of Angel Broking. Now joins us. Mayuresh, good afternoon. In terms of mid-caps, we hit a high today, a new fresh high. Do you think that mid-caps is the way to play, or now in mid-caps, valuations are very, very demanding?
Afternoon, Pankaj. I think you rightly put it. I think valuations have become extremely stretched for the larger universe in the mid-cap space. But again, I think specific stocks can be even looked at the current level. They're basically determined by how the business outlook probably is looking. There appear comparisons probably going forward as well. And again, I think the general macro environment for the sector as a whole. So I think a bottom-up approach is the way going ahead for the mid-cap universe, specifically looking at where valuations are at the current juncture.
Right. So, how should one approach the mid-cap space? Correction has not come in. So even a 3-4% correction, say, if we get in the mid-cap space, one should use it as a buying opportunity?
I think the best way to do it is in a SIF format. I think stagger it over the next few months, identify stocks within the respective sectors that can really do well, and largely I think get your investments over the next few months. I think whether the correction will come onto these stocks or the general market as a whole, I think time will be a determining factor. But if it does not happen, I think the best way of looking at it is going over the next few months, so that in fact reduces your impact cost in acquisition of the stocks that you're probably looking at.
Right. How would you look at something like a DLF? It used to be a very, very high beta name, but this time around we have not seen any major movement over there. How would you trade DLF from here on? It's around 168.
So generally, I think DLF or the real estate sector as a whole, I think the cautious stance is still recommended even at the current juncture. I think we still feel that a lot of real estate companies are still not out of the woods in terms of their operating performance. And if you go by management commentaries, I think at least the next couple of quarters are still expected to be soft, both in terms of how the perceived response will be for new launches, and again I think taking care of their inventory already there on their books. Having said that, probably the revenue recognition again does take time, and the operating expenses, specifically the fixed costs, probably are taking sheen in terms of their EBITDA performance. Couple that up with companies having high leverage on their balance sheet, I think the interest costs are eating away profits from the P&L. So largely I think the operating performance for the entire universe as a whole should be a little bit soft and muted, at least for the better part of this fiscal. And again, I think with the new law coming through and the implementation thereof, I think that's going to have some amount of issues for some players when it comes to how the cash flows will pan out, and specifically I think how the operating efficiencies and execution will play out as well. So largely I think one needs to be extremely stock specific in this space itself. I think look for companies having less leverage, I think where the market dynamics are more favorable to these players. So again, I think mandating an extremely stock specific approach in the real estate sector.
What's the view as far as Bank of Baroda is concerned? It's up 5% now. After the numbers, there was a disappointment in the overall sell side community. How would you look at Bank of Baroda?
So largely I think if one goes by what the performance has been for the quarter gone by, specifically for Bank of Baroda, yes, I think it was disappointing, specifically in terms of what was expected to pan out for the bank in terms of both asset quality, provisioning and the slippages number to come through. However, I think the market is expecting that the worst probably will get over in a couple of quarters for the bank, and once that probably happens, the granular growth that one really expects, specifically on the advances side, whether that be SME, Agri, I think that should start picking up meaningfully. If that probably starts happening, the annualized credit costs that one has built in the system specifically for FY17 should start dwindling down in FY18. Couple that up with expectations of credit growth recovering by by Q3, Q4 in the second half. I think that will have a positive impact as far as the leverage on the balance sheet goes. So again, I think the numbers will do the talking for Bank of Baroda going ahead. If they're able to consistently perform over the next couple of quarters, I think there will be a huge amount of re-rating onto the stock. I think the numbers will have to do the talking for the bank.
But, it's still a while away. So, no need to buy just because it's up 5%. Wait for a correction. If the valuations are decent, if you see some visibility on earnings, that's the time to buy?
I think that would be the appropriate way to go for it, Pankaj.
Right. As far as SBI is concerned with the merger of these banks, how would you look at SBI now?
No, I was positive, as I said, within the PSU banking space. I think this was one bank that have remained extremely optimistic about over the past few quarters. And even with the merger, I think the merger costs are going to be very, very minimal. Even if you look at the kind of dilution that it might have on the book, I think our own estimates suggest anywhere between 1.8 to 2% of the overall book size post the merger. Third, I think the asset quality itself, I think the chairman had pointed out in the quarter gone by that there might be some amount of deterioration in the quarter to come. But largely, I think even if one accounts for higher slippages to come through from the subsidiaries in the quarter to come, I think the entire synergies that will probably come through over the next few quarters can be substantial for a bank like SBI. It also gives them the leverage through the network that the regional banks had across the nation, and that probably will hold that in good stead as well. Thirdly, I think even in terms of the capital adequacy part, I think even after the merger, I think the Tier 1 ratio stays extremely healthy in excess of 10.5%, which will fuel balance sheet growth and expansion going ahead. So largely, I think the return ratio should remain unaffected. I think a marginal decline at best going ahead. But the added synergies that can come through over the next few quarters can be quite substantial. So any investor holding onto the stock can definitely hold on to Q2 numbers, specifically in terms of asset quality, might still turn out to be very weak, not just for the bank, but even for their subsidiaries.
Right. Let's just pull up Fortis Healthcare. It's a name which is down 3.5%. Of course, the board meet of SRL demerger is today. Let's just pull that name up. Fortis Healthcare. It's one of the names that was buzzing since the morning. So we'll just pull it up. I think it's down 3%. There you go. It's down 3.7. There's been a sharp decline over there. Details of SRL demerger likely to come in today, but it's down 3%. No particular news flow as to why it is down. I checked the exchanges. There is no particular announcement. Maybe just ahead of such a big board meet, such a big event that is there, you tend to see some sort of moves coming into these names. Let's also look at Stride Sashun. It's down close to about 3.5%. So in the last 5 days, Stride Sashun has lost quite a bit in terms of the movement. Mayuresh, any view on Stride Sashun? Numbers were not that great and markets are just pricing it and waiting for the delivery then?
Oh yes, again I think disappointment in terms of how the margin performance had been. And again I think the management was very, very clear that specifically on the API part, compliance costs are going to probably take the sheen away in terms of how the operating performance will be. Having said that, probably I think the strong footing of the US business will help them in terms of their consolidated numbers, though I think the numbers this time around did not help. And again, I think the acquisition that they've probably done, I think there's going to be a front load in terms of how the R&D costs are going to pan out. So largely, I think you are expected to see a EBITDA hit as well going ahead for the better part of this fiscal year. So Q2, Q3 numbers expected to be soft. So the markets probably, as you rightly said, I think they are awaiting some amount of performance probably expected to come through. The management is still gung-ho in terms of maintaining margins around in 20% or, but I think as in the case of Bank of Baroda, I think it's numbers that will do the talking for this stock.
Right. As far as Voltas is concerned, any view? It's up 5% today. There is a call coming in from Goldman as well.
Sorry. So again, I think as a disclaimer, I think we might be holding this stock in our schemes, and I have been optimistic on this stock for a long length of time. The performance was exemplary in this quarter gone by. And again, looking at the large contracts expected from Expo and Qatar, my own sense is that realizations will improve, 20% market share, earnings and EBITDA margin should so respect.
Right, Mayuresh, thank you so much for taking out time for us. Hope to see you again. That was Mayuresh.
Thank you so much.
As far as his view is concerned. We're taking a break, coming back in 2. Sensex is down 53 odd points and Nifty is down close to about 6 to 7 points.